Hey, everybody. Before we jump into today's episode, I just want to point out a few ways in which you can work with us here at How to SaaS. Number one, if you're an investor and you're in the middle of a transaction and you want to figure out what is the marketing potential of the target investment that I'm looking at, you can engage with us in a due diligence engagement where within 2 weeks, we can give you a very clear picture of all the levers within the marketing function of that organization for them to drive more revenue and pipeline for the business while being incredibly efficient. Number two, if you're the founder, CEO, operator, or investor of a company where marketing is just under leveraged and it's seen as a growth lever that requires more investment, we can come in and do a deep dive across 3 to 4 months and analyze all the opportunities within that business on the marketing side by looking at demand gen, paid media, account-based marketing, content marketing, product marketing, SEO, website, and much more, and come back with a set of recommendations and a roadmap for what marketing needs to execute against to drive more enterprise value for that business. And number three, if you're the CEO of a company that doesn't have a CMO right now, or there's a gap in the organization because the VP of marketing or CMO was recently transitioned out, we can come in a fractional CMO capacity and partner with you on that business and lead the internal team and the operational plan so that the marketing function continues to make progress and drive more pipeline and revenue. And we'll also help you hire your next CMO by being part of that hiring process and onboard that new person once they're ready to join the organization so that they get a running start. These three types of engagements are some of the most common ways in which investors, CEOs, and companies work with us. And we have a proven track record of driving a ton of enterprise value and revenue growth across those companies. To learn more, go to www.howtosas.com, where you'll get a lot more information in terms of the types of engagements I've described. And you can see case studies and other examples of the work that we've done, so you have a lot more confidence in partnering with us. And with that said, let's get to the episode. Enjoy the show. Welcome to the Private Equity Value Creation Podcast, where we interview leading investors, operators, bankers, and advisors to help you answer one question: how do we increase the enterprise value of our companies? My name is Shiv, and each episode I will dive deep with a guest to help you become a better value creator and capital allocator. So with that said, let's jump right in and let's get started with today's episode. My guest today is Lindsay Gray, and she is a partner at Pacific Lake, and they specialize in entrepreneurship through acquisition, or another way of saying this is the search fund model. And what I really loved about talking to Lindsay about is that their process for backing entrepreneurs and how they vet those entrepreneurs and how they support them as they look for companies to acquire, and how they follow that on with additional investment, value creation planning to help those companies scale, and eventually even exiting those businesses. So it was a really great episode, and it's a topic that I think a lot of entrepreneurs think about. Search funds are kind of this term that gets thrown around, and about 5 years ago it was a really big term, and then it kind of died down, and now it's become big again. And a lot of people are looking at this business model as a way to deploy capital because the entrepreneurs are attached to the investment before the capital is even deployed, and that helps potentially increase the likelihood of success. So it's something that I think a lot of firms should be thinking about. And I think the wisdom that Lindsay brought on the podcast, I think will help a lot of you as you think about your investments as well. So with that said, I'll leave you to it. Enjoy the episode. All right, Lindsay, welcome to the show. How's it going?
Great. Thanks for having me. Excited to be here with you today, Shiv.
Yeah, excited to have you on. So why don't we start with your background in Pacific Lake, and let's go from there.
Great. So first on me, I'm a partner here at Pacific Lake. We are a search fund investment firm where we back entrepreneurs in the search fund model, also known as ETA, or Entrepreneurship Through Acquisition. And I have spent the entirety of my career working with and supporting entrepreneurs. So earlier on, I was in early stage venture capital in New York. And I got into that space because I wanted to be in a position to support entrepreneurs building and growing great businesses. In the mid-20-teens, I got exposed to the search fund model and started investing personally in the space, initially thinking that by getting exposure to this other path to entrepreneurship, I might be a better venture capital investor. But after seeing the returns of the space and really understanding the model and the ability to work closely with entrepreneurs building great businesses through this model, I ultimately made the decision to join Pacific Lake about 4 years ago, and it's been a great journey.
Yeah, that's great. And talk about this search fund or entrepreneurship through acquisition model, because it's one of those topics that was a bit of a hot button topic a few years back. Seemed like everybody was running a search fund model,
Yeah.
and then it kind of went out of style. But it still exists. I've heard entrepreneurs and investors kind of talk about it, but it's a little different because in a lot of cases, first a company is acquired, and then if a CEO change is required, then you kind of go and look for a CEO. In this case, you're kind of doing it the other way, where you're backing an entrepreneur, and then you're trying to find a company for them to kind of invest in. So talk about the benefits of that, or why take this approach instead.
Yeah, absolutely. Yeah, we're kind of in a corner of the private equity market, but as you say, the model is different, and in some ways, turns the traditional private equity model on its head. So I'd be happy to walk through how it works. I'll also say there has been an explosion in popularity of this model, even since I've been involved over the last 5 to 6 years. And we are seeing not only more folks get interested in entrepreneurship through acquisition, but also a proliferation of the model and what it means to acquire a business, through the search fund model or through ETA. So I'm happy to talk about, how it works, and then also where we're seeing some of the divergence in model.
Yeah. Let's start this. Walk us through how the model actually works and the benefits of that.
Yeah. So you said it before. We start with the entrepreneur, not the company. And so the way we describe search funds it is a path to facilitate someone becoming a CEO, and in particular, CEO of a scalable business. So what we do is we first back individuals who have opted in to the search fund model, and who are looking to run for the long term a company that they find and acquire with the help of us and their other investors. And so what we do is we initially put in a little bit of capital, typically about $500K, alongside other investors. So we may be 20 to 25% of that initial $500K, which is meant to provide the capital for an entrepreneur to go out and find a business. So over the course of typically somewhere between 18 months and 2 years, this entrepreneur who has raised this $500K will pay themselves a salary and will use that capital to hit the road, right? To go out and meet prospective sellers of businesses that they might acquire, to conduct diligence on those businesses, and then hopefully to ultimately acquire one that will enable them to be the CEO. And when they do, their investor group, like Pacific Lake, puts in the equity capital for them to acquire that business. And so, when I say we're facilitating a path to the CEO seat, it's really starting at the very beginning of thinking about what company they might want to buy, all the way through acquiring that business, and then ultimately growing that business and having a successful outcome on the other end.
And so walk us through that search process, right? Because with the entrepreneur, they probably have strengths and weaknesses, or areas where they are better than their counterparts, and then areas where they're not as strong. And that should likely influence or impact the types of companies that they are fit to lead. So how do you factor that into the search process? Are they leading the search, or are you helping them with the search? Like, who's doing what role in that process?
Yeah. So the truth about the whole model, and we can talk about the search part specifically, is that someone opts into this because they want to be captain of their own ship, right? They want to drive. It's an entrepreneurial path that they are taking. They want to drive, what business they buy and ultimately how they run it. Someone raises a search fund in the model I just described because they most likely are an inexperienced operator. In our case, many of the searchers we back are immediately post MBA. Or they may be a couple years post MBA or have foregone an MBA but have a similar level of work experience. Regardless, in most cases, they've never run a business before. And so while they want to be captain of their own ship, they want to have kind of the authority to make the final decisions on the search and in the operating phase. They know that they need to surround themselves with folks who've done this before. In the case of Pacific Lake, we have backed over 300 search funds in the 16 years that we've been around. We've acquired over 150 companies. we've had more than 60 exits. So it's fair to say we have pretty good pattern recognition. And so our job in the search phase is to teach these entrepreneurs what good looks like and to support them as they go out and look for it. So happy to get more into that, but that's kind of how the model works. It's a player coach model, if you will, and we're here to coach and advise.
And so, as the business development process of actually sourcing the deal is being led by the entrepreneur.
That's right. So we teach them to fish, but ultimately they're doing the fishing. So we spend a lot of time up front, and before we even back CEOs, frankly, in the time where, or back searchers, in the time where we're getting to know them and deciding to work together, talking about what a good search looks like and what will increase the probability that they find a high quality business to acquire and run. And so in our case, we believe an industry thesis-driven search is the best way to acquire a company. You build a thesis about industries that are growing, that have mission criticality, and ultimately kind of underwrite those industries and then go out and look for a business within that industry, where there may be a willing seller who wants to sell to someone who will take over their business like a successor and run the business. And so, we teach them how to underwrite an industry. We work alongside them as they do that. We talk about how to engage sellers and how to, position yourself to, be a likely acquirer, and then ultimately how to get a deal done. So how do you negotiate with the seller and ultimately do the nuts and bolts of the acquisition process? So yes, they are deciding what industries and they are leading the search process, but we're there along the way to guide and support them and redirect in a case where we think they may be going down a path that won't be fruitful for them.
On the thesis side, that almost precedes the search, right? So who is drafting that thesis, and what does the process look inside your firm? Is the entrepreneur coming and saying, hey, look, I have expertise in manufacturing or chemicals or in software or in marketing, whatever it is, and I've built this thesis in this market and I want to try to find a company here, and then are you vetting their thesis or are you co-creating that thesis together?
Almost neither. So what I'll say is when we look for what searchers to back, we are not really super focused on what industry they plan to search in. We're interested in understanding, can they think about what makes a good industry? Right? Do they have the sort of ability to think through a thesis and have they paid attention to kind of what good looks like for other searchers? So, in particular, are they looking at industries that are sizable? Are they looking at industries that have good growth tailwinds? Do they understand mission criticality? We're underwriting their ability to analyze an industry. We're less concerned, do they pick an industry we like? And the reason for that is searchers ultimately search in multiple industries before they acquire a company. And so it's okay if we back an entrepreneur and, we haven't already upfront aligned on what industry they're going to buy in. That is okay. And that's pretty typical. We're also looking for other qualities that we have seen make a successful searcher and ultimately a successful CEO that are not related to industry. So, some of those characteristics that we look for are things like, we internally call it followership. Can they build strong relationships with the people around them? And the reason that's particularly important in this model is, remember, they have to convince a seller to sell them their business. So can they build relationships and do that well? Most of our deals, over 90%, are proprietary, have been proprietarily sourced, meaning they've got to build relationships with a seller who isn't already out selling their business. They need to convince really high quality talent to join them, even when the business is still really small. They need to convince their investor base to kind of stay with them along the way and support the vision they have for the company. So we're looking for things like that. Also, figure-it-out-ness is another kind of silly term we use internally, but that ultimately represents sort of what it takes to be a successful entrepreneur with these businesses, which means, you're not always going to know what problems are in front of you, but you have the ability to roll up your sleeves and dig in and solve hard problems. And so that's what we're aligning with them on up front.
It's almost like vetting the softer skills of figuring out, is this person capable of leading? It's almost like a pre-interview to figure out if you're actually going to back this person and deploy capital behind whatever company they find.
That's right. And typically that interview process, if you will, lasts many months, sometimes as much as a year or 18 months of getting to know them. And so over time, you can see patterns in their behavior that would indicate, do they have the qualities that will make them successful in searching and then ultimately, in operating. And so, we've aligned on that, and then we back them, and we've kind of have some alignment around what kind of industries are interesting and what sort of business models are interesting to Pacific Lake. But then ultimately it's up to the searcher to kind of decide, where they want to fish. And so we often will be their thought partner in that. We'll spend time, we do, industry underwriting, whiteboarding sessions where they'll come in and talk about it. But, what we're asking them to bring to the table is a thesis about, look around the world and think about what's happening in the world and come up with a thesis or a set of theses that we can run down together that will lead us to an industry or typically, a small niche within an industry that we think may be fertile ground.
And during this time, are they kind of quasi Pacific Lake employees, or they're kind of self-funding their way through this? Like, how does that work? Are they almost like entrepreneurial and looking for these opportunities? Like, how does the relationship get structured with Pacific Lake at that point?
Yeah, they are not employees of Pacific Lake. So they launched their own search fund. They, create a legal entity that they create before they take capital, and that entity is what receives that $500K of capital that I mentioned, that funds the rest of their search. So they are an employee of that organization. Sometimes, by the way, partners, two searchers will come together and partner search. That's pretty common here. Sometimes it's an individual, but regardless, they raise capital into that entity that funds their search, which again, it typically takes somewhere between around 18 to 24 months to find a business. And so they're an employee of that organization while they're searching. Pacific Lake put some of the money into that search. When we say we back a searcher, what we mean is we are providing the search capital. We like to do that as part of a syndicate. So we're typically somewhere between 15 to 25% of that pool of search capital. The remainder is made up of other search fund investors that are doing the same sorts of things as us. And the search fund ecosystem is still pretty small, so it's a repeat game with those investors. We often invest with the same types of folks, and we love doing that. We have found that it's an ecosystem that, really supports entrepreneurs well. And so we are one piece of that team that the entrepreneur is assembling, but there are others around it. And then maybe worth just taking it one step further, which is to say what we get as investors for putting up that search fund capital and funding that phase of the journey is a right of first refusal to invest in the deal, pro rata. So, for 20% of the search, we have a right to 20% of the equity when a searcher finds a deal. And that is the case with all the investors that put up the search fund capital. So, that is kind of a core tenet of the model. And, in our case, our follow-on rate is very high, north of 80%. And so, getting alignment upfront, spending time, evaluating what searchers we're going to work with is really important. It ultimately leads to good alignment when they find a company, and, we invest pretty.
Yeah, that was going to be my next question, is just what percentage of these initial search funds are actually translating into deals for you, and how long does that take?
Yeah. So we could talk about the ecosystem, sort of the search fund or ETA community, and then we can zero in on what it looks like for Pacific Lake. Acquisition rates in the search fund ecosystem hover around these days, 60%, give or take. Stanford produces a study, Stanford Search Fund study, every 2 years that always has really great data on this. Pacific Lake's acquisition rate, the acquisition rate of our searchers, has always been above what we see as an industry average. And we attribute that to several things, but we believe a key driver of that is this industry thesis-driven search model, where we are, our searchers are primarily, doing proprietary deal sourcing with this industry thesis guiding them. And we believe that leads to higher acquisition rates, and the data would support that. So in our case, it's over 70% of our searchers are acquiring, of course, with some variance from year to year. And then our follow-on rate, as I said, has typically been above 80%, meaning of the searchers that ultimately acquire, our follow-on with them is quite high.
Got it. Yeah, got it. That makes a lot of sense. So for you, it's almost like the acquisition channel to deploy your capital, but you need to back these folks to get there. What about on the entrepreneur side? Like as you're running these searches and you're meeting a bunch of entrepreneurs to potentially back and getting to know them, like what percentage of those folks actually translate into a search fund vehicle that you're willing to invest capital into?
Yeah, that's a great question. If you think about the very top of the funnel, people who are exploring ETA as a path to entrepreneurship, I'd say in a given year, we meet hundreds of people, maybe north of 1,000 people. I'm going to be on Harvard Business School's campus tomorrow. And if kind of giving a presentation, think of it as a Entrepreneurship Through Acquisition 101, educating folks who are at HBS about what this model means. But how many of those actually decide to search will be, far fewer. And we like to say this is an opt-in model. We do not, we're not trying to convince anyone to search. It's a hard path. It's an entrepreneurial journey that requires a lot of self-motivation. And so we're not trying to convince anyone to search. What we are trying to do is educate people about what this is and that it is a viable path to entrepreneurship. So the right people opt in. So ultimately, we'll back 20 to 30 searchers per year. In the past, that's been, I think last year we saw about 150 searches. Just folks, if you filter out people searching internationally, we only back searchers who are going to acquire in the US or Canada. And so it'll be somewhere around 150 search funds that get raised, of which we will invest in somewhere between 20 and 30.
Mm-hmm. Yeah, I guess the thought on that is like, are there certain characteristics that you're looking for? For example, does the entrepreneur need to bring capital to the table? Do they need to have a previous successful exit or a success story that they're coming from? Or can it even be someone just that's straight out of business school that maybe has some expertise or unique insight? Or it can be either or? I'm just curious, like, is there a certain profile of folks that you're looking for? And then a second question associated with that would be, are there any things that you notice during that process that would make you walk away from an entrepreneur? Obviously, there's the red flags that are obvious, but outside of that, any specific things that make you feel like this is not the type of entrepreneur that we would back?
Yeah, we can talk about this for a while. So I talked about the criteria that we typically look for. There's the ability to underwrite an industry, there's the followership, there's the ability to figure things out. Those are called attributes, qualities that a person has, and we look for those things pretty consistently across searchers. However, when we look at what people have done before coming to the search fund path, it's very diverse. And we have not found much correlation between what you did before searching and your success. So just to give you a sense of the range, we have had successful searchers whose prior experience was in the military. They were investment bankers or in private equity. They were in consulting. They worked in nonprofits. They worked in sales at a large company or at a small company. I mean, the range of experiences, the backgrounds that people have is quite diverse. I think it's the attributes, it's the qualities that I described where we see, kind of more correlation between, those who succeed in this path and those who don't. The other thing I'll say we look for, and this is very relevant at this current time, is we look for someone who has burned the boats. They're pursuing just this path. ETA or searching is not a backup plan. It's not like, oh, I didn't get that job at McKinsey, so maybe I'll find a business to buy. They are convicted that this is the path for them and that they want to be a CEO and this is how they're going to do it. And so I would say the thing that probably would lead us to not back a searcher that we meet the most frequently is that it's like, this feels like a backup plan or just something they're considering along with an array of options that look typical to what, people do post MBA or, at that equivalent chapter of life. The other thing I'd say is a lack of coachability. So given that we are primarily backing people who are not, extremely experienced, we are looking for people who will take coaching. And so that is something that you can suss out over time, building a relationship with someone is, do they ask good questions? Do they take good feedback? Do they implement that feedback before the next meeting what have you. And so, that's another key factor that we're considering.
Right. I guess, yeah, coming from different walks of life definitely introduces different opportunities that can be spawned by different entrepreneurs. What about in terms of skills themselves? Like, are you vetting for the ability to sell? You mentioned relationships earlier, but even just like going out there and spotting opportunities or having the ability to build great products or identify what users really care about in particular markets. Are you looking for those kinds of skills, or are you thinking about it more as like almost like a operational leader that has financial expertise and can optimize and kind of build enterprise value over time?
Yeah. So it's important that there's a history of past success, right? Regardless of what path you took, and skills that you acquired along the way that made you successful. But different folks we back will have spiked and continue to spike in different areas. So as an example, folks who have a military background very often spike on leadership. And when they talk about what made them successful in their military journey, it's that. Great. Like, we'll lean into that. If you've never, underwritten a deal before, we can teach you that. Others are excellent salespeople, as you said, but similarly, maybe haven't done lots of financial modeling. Like, that's okay. We may back someone who was a great investment banker who's never really sold a product or managed a big team. And as long as we see the sparks of their ability to do that, we understand that there is learning on the job that is going to happen for all of these folks. So you want them to spike somewhere. They have to have the qualities that we described before. They have to have horsepower, right? So we talk about like testing their ability to underwrite an industry and all of that. But I think it's important to say there's not like a checklist of skill sets that, we're running down as we meet someone. It's like, oh, they've never done a deal before, they won't be successful. Like, that's absolutely not the way, the way that this model has worked.
Mm-hmm, mm-hmm. That's great. And then as, the search process is going on, we talked about that earlier, but let's say you do find a company. From there, is it just more like a standard private equity process, or are you approaching it differently because it's a search fund and now you're backing this entrepreneur?
Yeah. This may be a good point, actually, if you don't mind a slight pivot, and I'll come back to this to talk about, there are a few different types. I talked about the proliferation of the model and how entrepreneurship through acquisition is now an umbrella that encompasses different models. So what you and I have been talking about, and I think what lives in most people's mind as sort of your typical search fund deal, is a single acquisition, right? It's an entrepreneur who meets a seller who owns one company. The plan is to buy that one company and run that company until you sell it. That model is still alive and well, and we do a lot of that. There are also, increasingly more entrepreneurs who take this ETA path, who have a specific desire to do a consolidation in an industry or roll-up, or a holding company where they're going to acquire multiple companies under, the holding company umbrella. So, think of it as different types of multi-acquisition strategies. And we believe you can be successful in ETA and all of those paths. So sometimes it's thinking about, searcher strategy fit, if you will, and then, supporting them accordingly. But when I talked about the proliferation of the model, it's to say there are different flavors of what you acquire and how you acquire it that we're seeing in ETA today, and that we support. We support that variety of searcher and model.
Mm-hmm.
That being said, is talking about how a deal gets done. So there are some differences with a typical private equity structure, and some things that are similar or the same. We are doing full buyouts of these companies. So the investor group puts up the equity. There's typically some debt put on these businesses to do a full buyout. Occasionally a seller will roll and things like that, which is also not atypical in parts of private equity, but it's a full buyout of a company. Again, in a typical, batch search where we've put up the capital for the search, that similar investor group, maybe even the exact same investor group, puts up all the equity capital for the deal. As I said, in our case, this isn't the case with all search fund investors, but most of our deals are proprietarily sourced. And so, it is the entrepreneur having a direct relationship with the seller, convincing them to sell the business, and that the entrepreneur will be good steward of that business in its next chapter, and negotiating the terms of that deal. So an entrepreneur will put a business under LOI, conduct diligence. It's a similar diligence process that a private equity firm would take, and then ultimately close the deal. But that's kind of a typical process.
What percentage, and you mentioned obviously just backing an entrepreneur for a singular investment is the main thing that you guys focus on, but what percentage of deals are more these roll-ups or the other types of deals that you mentioned?
So this is becoming a lot more popular. We did deals in the past that became, where the companies became highly acquisitive and that ultimately built value through an inorganic strategy over time. So it's not that we've never done that before, but I'd say what is becoming more popular, and this has been the case for a couple of years. I mean, it's not like it's brand new yesterday, but it's folks coming to us with specific thesis or specific desire to do a consolidation or a holding company. And sometimes the holding company, they already have a first acquisition. Sometimes they don't. They have an idea about what they want to build, and the idea is after the capital is put in, they will find the company to buy. So again, like many flavors of this, and we do all of those flavors. And believe that sort of the innovation around what ETA can be is a really important part of sort of maturing this model and, finding new pockets of success. So in terms of a percentage, I mean, it's hard to say, Shiv, honestly, like the ecosystem is evolving so quickly. But I think, there's a decent chance that somewhere between, somewhere around 20% of our current fund will get deployed into something that is not just a single asset acquisition.
How much of the company is the entrepreneur retaining as you are deploying the capital? Because obviously you're the capital partner and they're doing the search. And I'm assuming it also depends on whether they're bringing capital to the table, but just help me understand. And how is that different from, let's say, that entrepreneur landing a CEO gig at a PE-backed business where they're bringing capital or they're just being employed?
Yeah. So typically, when you raise a search fund, the entrepreneur is not putting up any capital up front. Their syndicate of investors is supplying all the capital, plus perhaps, as I said, some debt and maybe some seller role. But the entrepreneur themselves is not putting up capital, and that's almost always the case, and that is part of the model. So it's not expected that they would. And then they vest into their equity ownership. And so the vesting is typically a third. A third vests at acquisition, a third is time-based, and a third is based on performance metrics negotiated with their investor group. And so without putting in any capital up front, the entrepreneur can vest into meaningful ownership in that business over time. And some stats that might be worth sharing. We were just looking at these. I think it's helpful to give a sense of the magnitude. Typically, if we look out, over the history of Pacific Lake, and in our exits, average TEV at acquisition is somewhere between, somewhere around $20 million of enterprise value when they acquire the company. And if we look at our exits over just the last 4 years, enterprise value has been 115 million at exit. So growing from 20 to 120, at exit. So meaningful growth. And so what that means is, the average carry of the entrepreneur who becomes a CEO, who, vests, as I described, into their equity ownership over time, that average carry is $25 million at exit, just looking at the exits we've had. So without putting up any, capital up front, if you're successful in this model, it can be very lucrative.
Does it get to a point where sometimes the entrepreneur that you're backing, now you've invested capital and the business is growing, but you get to a point where that entrepreneur can no longer take that business to the next level and you kind of have to find another CEO? Or is in most cases, are you continuing to back that entrepreneur?
Yeah, in most cases, we're continuing to back the entrepreneurship. We back them with the expectation they will run the business. But you get to an interesting point typically, and we saw this over the first 10. So Pacific Lake's been around for 16 years, as I said, and we evolved our model in the last 6 years in response to, I think, some of what you're getting at with, what is the CEO journey? look like over time. So what we found in the first 10 years of Pacific Lake is, we would back a searcher, we'd support them in acquiring a business, they'd acquire the business, they'd run the business as a CEO successfully, and they'd reach a point in time where, on paper, they're worth quite a lot of money. I mean, I just gave what I thought was a pretty eye-popping figure when I first saw it, like $25 million to carry on average in this model. That's a number that, most of these CEOs can ignore. And so in the first 10 years of Pacific Lake, what we found is our most successful companies would reach this point where the CEO would say, look, like, this has been really good. I like what I'm doing. I've got my arms around the business, but like, I'd really like some liquidity to pay down my loans or buy my home or send my kids to school or whatever it is that they want to do. And our only path at that point was to sell the company, to give the CEO and the investor group liquidity and to set the company up for its next chapter. And we did that. If the entrepreneur's like, look, this is important to me, or I need to get off the bus, that's what we do. But we lamented that in a number of cases. And honestly, I think the CEOs did as well. And so in 2019, we launched a second strategy that basically solves that problem for the entrepreneur and the investor group in Pacific Lake. So we call this the long-term hold strategy. What this strategy does is it recapitalizes businesses in the search fund ecosystem that reach that point and sets them up for the next chapter. So we give the CEO some liquidity. We give investors some liquidity, particularly ones who don't want to hold the business any longer based on sort of the terms of their own funds. We sometimes put primary capital on the business, and we set it up for its next chapter. And in every case when Pacific Lake is doing a long-term hold investment, the CEO is staying on for that next chapter. That's an important kind of characteristic of a business that we think will recap with LTH. So we've done that 14 times over the last 6 years, and it's proven to be a very successful strategy.
It's almost like two different funds inside
it is.
Pacific Lake, where the second fund is finding liquidity for the first fund to be able to exit these companies, but still you guys retain the asset, especially if you're very bullish on the future of that asset.
Yes, with one caveat. The liquidity is really for the CEO, to take some chips off the table, and other investors. We typically actually roll our investment.
Right.
We are not buying and selling from ourselves in these two funds. But the point stands, it addresses this, fundamental issue we were seeing, which is like our very best winners were having to sell before anybody was ready to get off the bus. Because of very reasonable and rational, things that arise for a successful CEO who on paper is all of a sudden worth $25 million. And so that has helped us, roll those businesses for longer and compound the returns over time. That being said, there will be many businesses that reach the 4 or 5 year mark where, for whatever reason, it's the right time to sell. The industry is changing, competitive dynamics are changing, something in the CEO's life has changed, and they may have been very successful for 5 or 6 years or however long, and still think it's time to move on to the next thing, and that's okay. So the majority of our businesses will exit in that fashion, typically to either private equity, a private equity backed sponsor, or strategic, and that model works well too.
Yeah, at that phase, I would imagine, and correct me if I'm wrong, like, are you operating very similar to another private equity firm that has just done a buyout? Because you have a business, you have a hold period, you're looking at your IRR internally and what type of marks you kind of need to hit, and kind of making a decision on where you need to sell or when you should sell?
Well, remember, we are not majority owners in these businesses. Nobody is. It is, kind of by definition, in almost all cases, there are different models, by the way, where like an investment firm will be a majority owner in a business that looks like a search fund acquired business. But in our model, again, we're 20 to 25% of the cap table on average. And then there's a syndicate of investors who we know well and we trust and we're aligned with. But we as a collective will make a decision on when the right time is to sell a business. Again, if the entrepreneur's like, I want to get off the bus, we're probably all getting off the bus together. But otherwise, there are not many circumstances in which, Pacific Lake is forcing a sale. Like that isn't typical. It's typically, building alignment with the investor group and the management team of the company that it's the right time.
Yeah, that makes total sense. Yeah, especially in a minority model and the entrepreneur having so much control over the asset too. So that makes sense. What about on the value creation side? Are you supporting the entrepreneurs at all the way a traditional firm would, or are you letting the entrepreneur run with the strategy? Just help me understand the board dynamics and how you're setting prioritization or strategy, or at the board level, how you're kind of governing the business and figuring out where to invest more or scale, or maybe use inorganic channels and layer on additional acquisitions and things like that?
Yeah, there's a lot to unpack in that. So the first thing I'll say is Pacific Lake has a dedicated value creation team, which I know is pretty standard in private equity. It is not standard in search. And we're afforded the ability to have a dedicated value creation team because we're the largest investor in this part of the ecosystem, and over time have been able to build out a team. So we have a dedicated team of folks who just work with our companies post-acquisition to help them grow and scale these businesses. And I can talk more about the different ways that we help them. We're often taking board seats as well. There is always a board, whether Pacific Lake is on the board or not. All of the companies we acquire have a board that govern the company, and we participate in those very frequently. And the board, plays multiple roles, as they do in private equity, right? It's, governance, it's helping drive the strategy. In our case, it's a lot of coaching of the CEOs as well. And again, coachability is an important attribute. And so we take seriously our role as investors and board members that, guiding these relatively new CEOs as they go through the journey is an important part of the board and investor job as well. In terms of value creation, I'll describe the levers, but they're probably things you would guess. They're pretty typical. It's, number one, helping the CEO become a leader of a company. We like to say, every day they're leading the biggest company they've ever led. If we're doing this right, and so there's a lot to teach them about leadership, and we take that very seriously. But then beyond that, it's helping them build out their executive team. So we do a lot. We have a woman in our team who is a former executive recruiter, and that's still largely what she does for the Pacific Lake portfolio, is help them hire and retain great talent. We do a lot on go-to-market. So we have a gentleman on our team, Don Taylor, who is himself a very seasoned sales executive, and he's teaching our companies and working with our companies around their go-to-market motion and professionalizing their sales organization. Today, every company, whether you're a software business or not, needs to think about, how technology is changing either your company or your industry. And so we have an operating partner that focuses on that. And we also have one who focuses on M&A and sort of operational excellence generally. And as you said, at some point for many of these companies, an inorganic strategy makes sense. And so having someone who understands when that's the right time, how to find the right targets, and ultimately how to integrate them has become really key. So I'm super proud of the value creation team we have here. And I think CEOs really appreciate both our breadth and depth as they go through the journey.
That's great. Are you using a lot of, is it mostly the internal value creation team that's driving value with these entrepreneurs, or are you also relying on partners and external vendors?
There's a little bit of both, for sure. There are certain times where it makes sense for us to lean in, and there are other times where, our job is to connect the entrepreneur with the best resource to help them. And if that resource is external, we're very happy to do that. So, we are partners with an organization called One Guide. I'm not sure if they've come across your desk at all, Shiv, but what they do is help pull together resources for private equity firms and their portfolio companies so that those firms can connect their companies with great resources. And we use One Guide in their platform all the time. And what I'd say, they're great at many things, but one thing they're great at is constantly adding new experts and vendors to their platform that we can then we can then go to. So, if someone has a need particularly around something like compensation planning, we may not be the best people to roll up our sleeves and dig into compensation planning, but man, there are lots of great experts out there who can do that. And so if we can connect a company to a resource like that, we're always very happy to do that. So it's a mixed bag of our team and external resources, but always thinking about what's the best for the company at that time.
Yeah, that's awesome. And we're coming up on time, but before we close out, I have just one last question about this. Given that you guys have been doing this for so many years and have backed so many entrepreneurs, what would you say are some of the biggest lessons from the wins and losses that you've had?
That's a great question. I'd say, one thing we found is you're never wrong to focus on people and partnerships. And so, that starts with entrepreneurs, thinking about who are the partners that they should bring around them before their search has even begun. And, we hope that, Pacific Lake is on that consideration set. But regardless, we're always happy to talk to entrepreneurs about, who to surround themselves with. So I think surrounding yourself with the right people up front is really important. And then it pays dividends throughout. So it will help you attract the right people to your executive leadership team over time. And the value you can get from adding, a new high horsepower person to your team is really critical. So again, comes back to people and partnerships. In terms of lessons, I think the place I see most CEOs fall down the most, because they are very ambitious and they want to grow, is not setting the right priorities or setting any priorities and trying to do too much too fast with too few resources. And so I think that's one thing the board and we can help with, is making sure that the CEO understands, what are the one or two things I'm going to do next? How do I bring the people I have around me to support me to do that, well and efficiently? And, then I can move on to the next thing. So, again, ambition can lead us to go awry of those things. But I think the importance of prioritization and partnerships can't be underestimated. So, that's what I encourage them to focus on.
Yeah, that's great advice. And if there are entrepreneurs listening that may want to partner with Pacific Lake, what's the best way to get a hold of you or Pacific Lake?
Thanks for asking. To get a hold of me personally, my email address I'll give out is just Lindsay with an E at pacificlake.com. And anybody who's interested in learning more about the ETA model or, working with us specifically, I'd be happy to hear from them. And then, I'm also happy to kind of triage other folks on our team that might be best suited depending on the topic. So would welcome the outreach.
Awesome. Yeah, we'll be sure to include that in the show notes and all the other links about your firm and anything else that we can share. And with that said, Lindsay, thanks a lot for coming on and sharing your wisdom. It's a topic that we previously haven't covered on the podcast. So I think a lot of firms that think about deal flow and even backing their own form of entrepreneurs and search funds, I think, can learn from it. And even people that are actually actively in the space and trying to learn from the lessons that you've built over the years after doing this for many times over. So appreciate you doing this.
Thanks for having me. It was a lot of fun.
Thanks for listening to today's episode. Before you take off, just a few requests from our side. Number one, if you haven't done so already, please subscribe to the podcast on iTunes or Spotify or YouTube or wherever you go to listen to your podcasts. Number two, if you are in the market for due diligence services, strategy consulting, or fractional CMO services, please get in touch with us at www.howtosaas.com. And third, please buy a copy of my new book, Exit Ready Marketing. It covers a ton of concepts that we take our customers through, private equity investors, B2B companies, CEOs, operating partners, and marketers. And there's a ton of great value in there that expands on my previous book, Post-Acquisition Marketing, as well. So with that said, I hope you enjoyed today's content, and we'll see you on the next episode.